Okay, I have 12:02. We're going to get started. First, I want to say welcome and thank you for joining us for this student loan workshop. I want to say a special thank you to Assemblymember Jim Cooper and Senator Dave Cortese for helping us reach out to you and bring an audience to talk about this really great and important information. Again, my name is Cooley. I am the Targeted Outreach Director for the Department of Financial Protection and Innovation. I want to introduce the team that's going to be presenting a lot of information to you. Selena, go ahead.
Hello, everyone. Thank you for joining us. And we're glad to be here today. My name is Selena Damian, and I am the Student Loan Servicing Ombudsperson at the California Department of Financial Protection and Innovation, DFPI. Thank you.
Hi, everyone. Samantha Singh, Legislative Director and Policy Advisor at NextGen Policy, also known as NextGen California. Happy to be here as one of the co-leading organizations of the Campaign for California Borrowers' Rights. And I'll pass it on to Natalia.
Thanks so much, Sam. Natalia Abrams here. I am the President at Student Debt Crisis Center. And we are honored to be here to provide very important updates on the student loan workshop. And I'll pass it back to you.
Thank you, Natalia. So again, we have a really great presentation for you. Let's go ahead and just dive right into it. First, I do need to put out a disclaimer. This webinar is being recorded. It will be, the recording and the slides will be provided to all of you attendees after the event. If you do have a question, we've disabled the chat, but you can actually submit your question through Zoom's Q&A feature. So feel free to put your questions in there. My team here is going to answer the questions they can, but we also have a dedicated Q&A section at the end of the webinar, and we will answer some questions at that time as well. And then, of course, all information presented in this webinar is accurate as of now. We know there's a lot of updates and changes happening in the student loan sphere. So as of right now, the information we are presenting is accurate. All right.
Hello, I'm California State Senator Dave Cortese, representing Senate District 15 and encompassing the Silicon Valley. I'd like to thank the Department of Financial Protection and Innovation, the Campaign for California Borrowers' Rights, for the work they're doing to help all of you understand the basics about student loans and help provide access to student debt relief. The student debt crisis we face today has become a dead weight on our economy and on families everywhere. It's keeping our students and our families from getting ahead and keeping our most marginalized communities disempowered. While we encourage everyone to pursue higher education, the cost of college has skyrocketed, forcing more and more students and families to borrow and leaving less and less money for folks to invest in buying a house, saving for retirement, or just getting their career started. Addressing the student debt crisis is long overdue, and by doing so, it will not only jumpstart our economy, but more importantly, it will expand opportunities exponentially for our students, our families, and our most vulnerable communities. I'm proud to support the Biden-Harris administration student debt cancellation plan, and that will help alleviate financial burden for many Americans. According to President Biden, 95% of borrowers can benefit from the plan. Roughly 43 million people could qualify for debt relief. This is huge, and I hope that many of you will take this opportunity and continue to invest in your own futures. As your state senator, I'll continue to advocate for an affordable, high-quality education for all. Thank you for the opportunity, and I hope today's webinar will help to provide encouragement and hope for all of you in building a better future. Thank you again for the Department of Financial Protection and Innovation and the Campaign for California Borrowers' Rights for everything you're doing and for being here today.
Okay, that was a message from California State Senator Dave Cortese. And again, thank you for having him or giving us the opportunity to come talk to you. I'm going to hand this off to Samantha to talk a little bit about our coalition.
All right. Yes. Thanks, everyone, for joining us today. And we will shortly get to the critical information here. Just wanted to let you know who we are. So the Campaign for California Borrowers' Rights, we're a leading statewide coalition comprised of organizations, nonprofit organizations, advocates of students, higher education advocates, borrower protection organizations that are all fighting to ensure that all student borrowers have rights, are protected, and get supported in the ways that we all need that. And the following organizations, we all lead the campaign together. That's the Student Borrower Protection Center, Student Debt Crisis Center, us, Next Gen California, Consumer Reports, and Young Invincibles. So we're very happy to partner today for this workshop. Again, thank you to Assemblymember Jim Cooper, Senator Dave Cortese, and DFPI to co-host this workshop together. And today you'll be hearing from also Student Debt Crisis Center from the campaign. And I will pass it on to Selena.
Thank you, Sam. I'd like to start off, first of all, just letting everyone know who we are, who DFPI is, who we are, and what we do. We are California State Consumer Protection Agency. We are formerly known as Department of Business Oversight, so you may have not heard of us before, but we have been around. Our duties include to license and examine companies of financial products, and that includes student loan servicers. We take and investigate consumer complaints. We take legal action when companies are not in compliance through our enforcement unit, and conduct education and outreach such as this one to enhance consumer awareness and to protect consumers from fraud and abuse. Next, please. Let's first go over some numbers, some data, student loan debt in California. In California, there are approximately 4 million borrowers or Californians with student loans that owe approximately 156 billion in both federal and private student loan debt. Most of that is federal student loan debt. In 2019 and 2020, 46% of California college graduates had student loan debt, and 35 to 49-year-olds owe the most debt on average, with women carrying more debt than men. The average debt load of a California borrower is $37,000, although I do believe it's a little bit lower according to the latest statistics or latest data. Prior to the COVID-19 pandemic, approximately 500,000 borrowers were behind on paying their loans. And in the United States, student loan debt is now the second highest consumer debt category after mortgages, totaling nearly $2 trillion. Next, please. Let's talk about some protections for student borrowers in California. Although the federal government does provide some protections for borrowers, which are established to the Higher Education Act, those were not sufficient to protect borrowers and to help prevent this crisis that we're in. Therefore, in 2020, California introduced the Student Borrower Bill of Rights. It was introduced as Assembly Bill 376, and it became effective January of 2021. The Borrower Bill of Rights applies to student loan servicers doing business in California, and this includes state licensed servicers as well as banks doing servicers. And just so you know the difference, we will be mentioning servicers a lot, contacting your servicers. They are the borrower's main point of contact. The servicer is the company that the borrower is calling to make the payments, to ask for payment arrangements, ask for forgiveness plans. They are the borrower's main point of contact, different than the lender. The lender is the company that lends the money, sets the terms, interest rates. So for federal loans, that's going to be the Department of Education will be your lender, and then there's different servicers depending on where the account is located, but the servicer is a borrower's main point of contact. The Student Borrower Bill of Rights applies to borrowers with both federal and private loans, and California is only one of 13 states that has this established advanced legislation to strengthen oversight, which was lacking, of student loan servicers and to protect borrowers. And what it does is it prohibits servicers from engaging in abusive, unfair, or deceptive practices. It requires that servicers work in the best interest of borrowers and provide accurate information and to help them stay out of delinquency and default. They have to provide accurate information on payment plans, on forgiveness options, and basically work in the best interest. It establishes special protections for military borrowers, borrowers working in public service, older borrowers, and borrowers with disabilities. The Borrower Bill of Rights also established my position, and as the ombudsperson, I work with agencies such as the ones I'm presenting with today, excuse me, with other state, federal agencies to oversee, to understand updates, policy, legislation. I do outreach and education such as this one, and I do help borrowers directly, help them understand their options and their rights. Next, please. Now I just want to talk about federal loans, the different type of loans. So you have your federal loans and your private loans. Since 2010, the Federal Department of Education has been providing direct loans. So these are going to be your Stafford loans. There are two types of direct loans. You have your subsidized and your unsubsidized. The main difference between these is that subsidized loans do not accrue interest while the borrower is in school. So the government Department of Education pays the interest while the borrower is in school. Your unsubsidized loans, the borrower pays the interest from the time of disbursement. So these loans add the interest to the loan balance and increase the size and the ultimate cost of the loans. You'll see when you download your aid data or you're looking at your loan information, you may see direct, subsidized, or unsubsidized. Both considered direct, but that's the only difference is in the interest. Then you have your direct plus loans. There are two types of plus loans where these have fixed interest rates, they're unsubsidized, and credit check is required for these loans. You have your grad plus loans, which are available to students pursuing graduate degrees. And you have your parent plus loans, which are available to parents of undergrad students. These loans do have an origination fee and interest rates may be a bit higher than your direct loans. Then you have your direct consolidation loans. These are loans where the borrowers combine their federal loans. So sometimes borrowers may have a mix of direct subsidized and then direct plus grad loans. So they're able to consolidate them all into one with a single loan servicer and one interest rate. Consolidation is similar to refinancing. There is no cost to the borrower, but it may increase the total balance of a loan. So borrowers do have that option. Then you have your federal family education loan, your FFEL loans. These are subsidized loans made by a private lender and insured by the government. These were discontinued in 2010. And then you have your Perkins loans, which are subsidized loans made by schools to undergrad students based on financial need. And these were discontinued in 2017. And although they were discontinued, you will have many borrowers that still have these loans. They're still paying on them. So borrowers, again, may have a mix of loans depending on when they attended school. Next, please. Then you have your private loans. So once a borrower exhausts all their federal loans, they may opt into or have to take on private loans. These private loans are made by lenders such as banks, credit unions, a state agency, or directly from the school. These are not funded or subsidized by the federal government. Because they are privately owned, they don't offer the flexible repayment terms and forgiveness options that are provided by federal student loans. They often require an established credit record and a cosigner. One very important thing to note is that once you refinance into a private loan, you cannot revert back to a federal loan. So again, when you're looking at your options of whether or not to refinance these private loans, just know what you're getting into and know that you cannot you cannot convert these back to a federal loan and then get access to these programs that we're going to be talking about in the next few slides. Next, please. Okay, I'll pass it over to Natalia now for the rest of the updates.
Thank you, Selena. And thank you. I see over 100 people on a lunch hour taking time to learn about your student loans. That's always the best first step, right? So we're going to talk about federal student loan updates. To many of you, this might be old news, but it's important to note that for a majority of student loan borrowers, under the CARES Act since March of 2020, student loans have been paused and interest has been set at 0%. Student loan borrowers with direct loans or loans owned by the Department of Education were included. We do know a small subset of loans were not included for the payment pause. This also required servicers to report credit credit reporting agencies as if you were making regular scheduled payments. And we're accruing and reporting monthly payments of $0. Here's the big update. Borrowers should be prepared to enter into repayment January 1st or January of 2023. So the payment pause is set to end at the end of this year, and payments will resume in January of 2023. Another update is that there will be a one-time account adjustment of income-driven repayment programs. This is for people that have been on an income-driven repayment program, that qualifying payments for direct loans and federally managed FFEL loans. Borrowers will receive credit towards their income-driven repayment and public service loan forgiveness for any months which you've made payments regardless of the repayment plan that you were in. If you have had 12 months of consecutive forbearance or 36 months of cumulative forbearance, many borrowers are placed into forbearance as opposed to income-driven repayment programs. This point is speaking to you. And lastly, months spent in deferment prior to 2013. And with that, I will pass it back to you, Selena, to go over the very important PSLF update.
Thank you. Okay, public service loan forgiveness. I know we've been hearing a lot about that. So what is PSLF? It was a program that was created in 2007 to encourage individuals to enter and remain in public service. Under the program, student loan forgiveness is granted after satisfying certain criteria for 10 years. The traditional PSLF requirements are that you have to have the right type of loan. You must have a direct loan or those that are owned by Department of Education, those 2010 and after loans that I spoke about. You have to be under the right type of repayment plan, an income-driven repayment plan. You have to have the right type of employment. So you have to be working for a government agency. It can be city, county, state, municipal. It can be a water district, a school district. It can be military. Military service counts towards, is a qualifying employer, and tribal as well. Also nonprofit, 501c3 agency. It's considered a qualifying employer as well. Then you have to have right number of qualifying payments. You have to have 120 qualifying payments while working for the employer. After you meet the criteria or make the 120 payments, the balance is forgiven. Next, please. So in last year, October 31st of last year, the PSLF waiver was created. In 2017, when the first batch of borrowers, after 10 years, the first batch of borrowers applied for forgiveness, there was almost 99% denial rate for not meeting the program requirements due to the mismanagement of the program, lack of oversight of servicers. Borrowers they weren't on the right track for forgiveness, and therefore resulting in this denial. This PSLF waiver was created.
Oh, we might have lost Selena. I'm going to give her a couple more seconds, see if she could jump back on. Otherwise, I could take over right here. She might be having connection issues. Okay, so the limited public service loan forgiveness waiver was created essentially to help alleviate all these different issues. Hey, hi, Selena. You're muted.
Okay. Next, where did I end off? Sorry.
Oh, I think you got cut off talking about the creation of the public service loan forgiveness waiver.
Okay. Well, let's go into the requirements. So it was created because of the high denial rate, and then let's talk about the requirements and what's different now. So it's the next slide, please. Okay, so under traditional requirements, as I said earlier, you have to have a direct loan. Under the PSLF waiver, a borrower can consolidate their FFEL, Perkins, or other federal loans into direct loans. they can, when they consolidate, they can receive credit for previous payments made on those loans. Traditionally, under PSLF rules, if you consolidate, you would start at zero and have to work towards those 120 qualifying payments. During the waiver, they will allow you to get retro credit on those loans, which is the main benefit of this program. Parent Plus loans are not included unless consolidated with the parent's own loan. So Parent Plus loans alone do not benefit from the waiver, essentially. The employment requirements, those haven't changed. The only difference is that the borrower does not need to be employed or in the qualifying employment at the time of forgiveness. This benefits borrowers that maybe moved on to private service or borrowers that have retired already. And then the qualifying payments. Any past periods of repayment, whether or not you made that payment on time for the full amount or on a qualifying repayment plan, will now count towards PSLF. So there were borrowers that were making, maybe were 1 cent under on their payment, a few, 1 day late, making future payments, and were not receiving the credit towards PSLF. So in order to alleviate that, that's what this waiver does. Now they're able to get credit for that. Also, as Natalia mentioned, certain periods of forbearance and deferment may count, which don't traditionally count under traditional rules. And then something that's really beneficial also for borrowers, all the months in COVID forbearance count towards PSLF. So that's about 2.5 years, about almost 30 months of PSLF qualifying payments. Again, as long as a borrower was employed, they can receive credit towards the forgiveness. Next, please. So what does a borrower need to do to find out if they qualify, first of all? Well, you need to find out if you have a qualified employer. FSA has an employer eligibility search tool where a borrower can search with their employer's federal employee ID number. You're going to need that anyway for the application, so it's very important that you find that. You can Google that, or you can obtain that from your W-2 form or tax information. W-2 forms has that information. So a borrower can log on to the tool, enter their they don't need to create an account, just enter the FEIN number and the dates, and they will see if a employer is certified. And that means that someone from that agency has already gone through the program or is currently in PSLF enrolled. If the employer doesn't come up, that doesn't mean that they don't qualify. It just means that they haven't gone through maybe just haven't been certified, or no one from that agency has gone through that. And then you need to find out what loans you have. That's very important. And I think for any of these programs, it's just very important that you know what you have, federal, private, and what type of federal loans you have. You can find that information on studentaid.gov, create an account if you don't already have one. You're able to download your aid there, see disbursement dates, type of loans, even loans that have already been paid off. Once you determine what kind of loans you have and if you need to consolidate, again, if you have those older FFEL, Perkins loans, those are the borrowers that benefit the most from this waiver. Then you will need to consolidate. Again, it will be done through the studentaid.gov page. Borrowers do not have to finish the process. They just have to complete the consolidation and use the help tool to create the public service loan application on the site. And then as long as it's done by October 31st, they can benefit from the waiver. If you start at this time, I can guarantee you, you're not going to get an answer on consolidation or forgiveness status. But as long as you've created an account and taken those actions on the FSA website, you will benefit from the waiver. Next page, please. And this is just, it's a hard copy of the PSLF application. Page 1 is what you will be creating on the PSLF help tool. It's pretty simple, your information, and then you check 1 or 2 boxes. You will have to save, download, and print this application. And then page 2 is a page that's provided to your employer. The most important thing I can say on this is make sure that its information is clear, dates are complete, it's legible, and that you obtain a wet signature if possible. Well, that you obtain a wet signature. You do not want to have any denials or delays because of a date that's not clear. There is an option if you are not able to reach your employer. Let's say that you worked for them some years back and they closed, or they're not available. There is an option where you can submit W-2 forms, and that information, that process will take a bit longer. So I would do my best to try to obtain the information. I've been helping borrowers reach out to old employers, state agencies, other agencies when sometimes they're having a hard time obtaining signatures. So please feel free to reach out if you need some help with that. I can try to assist, but just make sure it's clear and legible when you submit it to your Mohila, who is the PSLF servicer now. And next, please, I believe we are going on to, yes, to the student debt relief information, and I'll hand it back to Natalia.
Thank you so much, Selena. And I do encourage you all to reach out to Selena. I'm so grateful you are here to help borrowers. Now we're going to talk about the most recent updates, which is the Biden-Harris administration student debt relief plan. So to clarify, this is a plan for most borrowers separate than public service. You do not need to work in a public service job for this. So let's go over the basics. About a month ago, a little over a month ago, President Biden announced that most borrowers that make under $125,000 for individuals or $250,000 for married couples will receive $10,000 of student loan relief. Those who had Pell Grants, any amount of Pell Grants, which is typically lower income students, when they borrowed to go to college, will receive an additional 10 grants. So up to $20,000 total. Again, this will be for those who make under 125 or 250 for households. And you can log into studentaid.gov to find out more, or you can also go to studentaid.gov/debt-relief-announcement to learn more about this program. Along with the announcement, they announced that student loan payments will restart January of 2023. And there will also be a new income-driven repayment plan, which should drastically lower payments for many borrowers. That's not fully baked yet, so we're still awaiting more plans on the new IDR program. Moving forward. So then also, something exciting today, if you go to the White House on Twitter, if you're on Twitter, they are finally giving us a glimpse of what the form will look like. Now, I will stress the form is not out yet, but we are being told that it will go live this month in October. It will remain open until December 31st of 2023. So this will be, over a year and like 3 months that people will have to apply. From the looks of it, the application is very short and simple. You will have to self-identify your income. There will be no documentation required in the first step at all. You won't need to have your FSA ID. You just have to fill out this simple, it looks like a 2-page form, which will be available online. You can do it from your mobile device as well. They will also soon after, not right away, have a paper application. The other thing I think that is really wonderful is that the forms will be available in both English and in the Spanish language. Moving forward. So let's just go over which loans are eligible for debt relief. So for federal direct loans, these are loans that were largely issued after 2010. Some people have direct loans before that. But all of the direct loan program qualifies. Subsidized, unsubsidized, parent loans, we get this asked all the time. Yes, the parent plus loans count. Yes, graduate plus loans count. And yes, direct consolidation counts. All other loans held by the federal government, the FFEL or federal family education loans that are held by the Department of Ed count, along with Perkins loans held by the Department of Ed. Defaulted loans. This includes all ed held or commercially serviced defaulted loans, subsidized Stafford, unsubsidized Stafford, parent, graduate, and Perkins, only ed held do qualify. You see in the red at the bottom as of September 29th. So those who had consolidated before September 29th with privately owned FFEL loans, you are no longer eligible after the 29th. So if you consolidated before the 29th, you're okay. Unfortunately, there was a sudden change on September 29th that is no longer counting. A good way to know, whether you're a part of this is if you were on, your loans were on pause with the payment pause, you qualify for debt cancellation. Moving on. So here's what you can do to prepare, because we know that I'm anxiously awaiting the form. We're all anxiously awaiting the form. So one of the best things you can do is sign up for updates at the Department of Ed. That's www.ed.gov/subscriptions. And if you check the box that says new student loan updates, you will be the first to be notified about the form. If you want to cross all your T's, dot all your I's, make sure, just double verification, please sign up to the DFPI who's hosting this workshop newsletter. They will also let you know as soon as the form goes live, so you can sign up for debt cancellation. I will say that the Department of Education is letting people know that as you don't have to apply on the very first day, but as long as you apply by November 15th, you should receive debt cancellation before payments resume. They will be doing account adjustments. So even if you're not getting all your debt canceled, it should lower your monthly payment. Check your income eligibility for 2020 or 2021 tax year. Also, log into studentaid.gov if you create an account if you haven't already. We tell all of our supporters, studentaid.gov should become your best friend right now. This is where you go to consolidate, to sign up for updates, to eventually sign up for the form. But right now you can verify your contact information, check or confirm whether you received a Pell Grant, check or confirm what loan types you have, and determine who your loan servicer is. And then you can create an account or log into your servicer separate from the studentaid.gov to also make sure all of your information is up to date. Moving forward. Okay, so whenever something great happens, like student debt cancellation, we unfortunately have a lot of student loan scams out there. Now, scams are nothing new to student loan borrowers. I'm sure if you're a borrower, you have run across these before, but they have definitely increased tenfold since the cancellation announcement. I know I'm getting calls almost every day. So they will reach out by phone, by email, social media. It can often seem very official, like they are part of the Department of Education or part of your school that you attended. But just remember, the Department of Education is never going to call you. They would reach out to you with a .gov email. They'll make lofty promises of reducing or eliminating your student loan debt, offer you quick loan forgiveness, and say you'll miss out on eligibility, promise special access to repayment programs, all things, again, that you can do for free, completely free of charge at studentaid.gov. And they'll ask for your FSA ID and username to steal your identity. So, it's very important to just be aware of these scams and know that your best friend, again, is studentaid.gov. Moving on. So here, to protect yourself with these awful scams out there, there is nothing a debt relief company can do for you that you can't do on your own for free. And we know that sometimes it can be a laborious process going through these forms. That's why DFPI is here to help. That's why the Coalition for California Borrowers is here to help, and so many other organizations. But none of us charge, and you should never be charged for student debt help. Loan servicers and the federal government will never call you on the phone. Like I said, told us that with the cancellation form, they will be reaching out to you with .gov email addresses. That's what you want to look out to verify that they are in fact the federal government. Also, always research the company. We have borrowers that write us all the time saying, I feel like this is a scam. Is it? I would say 9 times out of 10, yes, it's going to be a scam. Make sure to call your loan servicer or go to studentaid.gov for help with payments. Do not subscribe to any monthly service. There are services that will say, you know, we'll charge you a small fee of $20 to monitor your account. Do not do that. And talk to DFPI. You know, definitely let people know if you have been a victim of fraud or you have come across one of these fraud websites. Moving forward. And here's how you do it. So the best way, if you run into trouble with your student loans, or if you run into any of these scams, you can file a complaint. And I will tell you that the people at FSA, CFPB, and DFPI want to hear from you. By filing these complaints, this is how we go after these bad companies. And this is also how we fix the problems with your loans to the best of their ability. So you can go to FSA complaints, that's financial student aid with the federal government. That's at studentaid.gov/feedback. You can go to the CFPB to complain. That's the Consumer Financial Protection Bureau. I would say with the scams especially, that's a great place to go to. And that's at www.consumerfinance.gov/complaint. And then finally, your trusted source of who's hosting this webinar, you can complain at DFPI, that's Department of Financial Protection and Innovation. And that is at dfpi.ca.gov/file-a-complaint. And I just can't stress enough to you that filing a complaint not only helps you, but it helps others not have to run into the same situation.
Perfect. Thank you, Natalia. A lot of really great information. And yes, absolutely. If you do have any issues, whether it's with your student loan servicer or if you experience any kind of scams or fraud, or you think you're being scammed or experiencing some fraud, definitely want to submit a complaint. At the very least, submit it to the DFPI. We have a team that will investigate. So thank you, Natalia. Right. So now we are at the Q&A session. There's a lot of really great questions. I'm going to just go down the list, and then our panelists, I'm going to let the panelists answer if they can. Here's one that was emailed to us before the webinar. They're asking, is there someone that could help me fill out my paperwork? These seem to be too complicated for me. Any panelists want to answer that?
Hi, Ku, can you hear me?
Yeah, I can hear you. Go ahead.
Unfortunately, with the capacity, there's only one of me, the ombudsperson at DFPI. I can help when a borrower reaches out and needs help real specific about doing the application. I can lead them to resources. We have some really good webinars, and what I've been doing is, if there's a specific question about consolidation or how to download data, I can point them in that direction. Even the videos, if it's just very general about which application to fill out, let's say for PSLF or the Biden relief, I can assist with that. So as long as it doesn't require too much where I have to really, there's a lot of back and forth with applications, I'll try my best. They can reach out to me, but if I'm not able to, I will refer them out to we work with other nonprofits, legal aid agencies, other student aid nonprofits that could help them. If there is a really complicated, more like legal issue, then we can refer them as well. But feel free to reach out, and I can pretty much point them in the right direction of the application.
Thank you, Selena. And I do want to add, we'll talk about the slide here in a second, but this very first link here, dfpi.ca.gov /back on track. It's a dedicated web page, microsite that the DFPI has built to house a number of different resources. One of those links actually leads to a list of nonprofit organizations, legal aid groups that provide assistance to individuals who are looking for help, whether it's with their paperwork or if they have questions. So we'll talk a little more about this when we get to the resources section. Okay, next question. There's a lot of questions asking about the video and the slides. So the slides will be provided to everyone who registered. We will send out the slides via an email, also the video as well. So we're recording this webinar. We will send a link to rewatch the webinar if you want to, and then of course to download the slides. Okay, I'm just going to go down this list right here. Will Selena Damien's contact information be provided? Yes, we have a slide at the very end, and I will make sure to show that so that you can grab it. But again, when we emailed out the slides, her contact information will also be in the slides. Okay. Any services related to obtaining proper accounting of loan payments and interest payments? In other words, is there any way to ensure loan servicers are applying payments correctly? So I think this has to do with the Student Borrower Bill of Rights. Selena?
Yeah, and I think I already answered it, but I can answer it here. What I advised the borrower was to go ahead and file a complaint with DFPI. Under the Bill of Rights, a servicer does have to respond within 15 days if they go through DFPI, basically. So all a borrower has to do is fill out some authorization forms, submit the complaint, and say they want a complete account history. If they have any questions regarding PSLF or regarding interest, like this borrower had or this viewer had, they can include that in the complaint. I've seen some very thorough responses, thorough account histories that as responses from servicers. So I would start there and have them, contact them that way. That way they get a faster response and a more accurate response as well. But that is one of the Bill of Rights provisions, is that they have to respond within a certain amount of time. And I did include the link in the answer when I responded.
Awesome. Thank you, Selena. Here's a quick one that I'm just going to knock out. What is a wet signature? So what this person was asking to is in reference to the public service loan waiver application. You need to have a physical signature from past employers, right? So you're trying to certify your employers as, a nonprofit or a 503 or 503c organization, 501c3. Oh, sorry. But basically, they have to certify that they're an eligible employer. And so you need a signature from an official, and that signature has to be what's known as a wet signature or also a physical signature. You can't have a digital signature enable for that certification to be accounted. Okay, here's another one. This should be pretty quick. I'm a reporter from Sound of Hope Radio. Could you please email me slides? Yes, the slides will be emailed to you after the presentation, but I do want to offer, as news media, if you do want to have an interview with either one of our panelists, Selena Damien, who's the DFPI student loan buds person. She's done interviews for news media before. If you have questions, you want to try to spread the word to your listeners, viewers, attendees, etc., please feel free to reach out to us. We're more than happy to accommodate those kind of media requests. Okay, panelists, by the way, if you see any questions you want to answer. Oh, Selena, hand up. Oh, you're muted.
I did, and I actually flagged a few. Somebody asked about if they qualify for PSLF and relief, the Biden relief, which one should they apply for? You can actually apply for both. That's something that's really important. One didn't deny you from applying from the other one. Actually, depending on your balance, you could get the relief, the 10 or 20,000, and then continue on your way to PSLF. So they actually work. You can benefit from both. It just depends on the borrower's balance and their plan, basically. Natalia had her hand up.
Oh, yes, just to add into what you're saying, Selena, the one thing I will say or add on PSLF is there's no cap for what they can cancel with public service loan forgiveness. So unlike the Biden-Harris cancellation plan, where it's up to 20,000% borrowers for public service loan forgiveness, there is no cap to how much that they will wipe out. We're telling everyone, I think you are too, Selena, when in doubt, apply. If it's been several months and you've heard no response, which we have been hearing from lots of borrowers, apply again. You shouldn't have to, but when in doubt, apply again now this is back to public service loan forgiveness for the public service loan forgiveness waiver. And just to clarify, that is for people that worked 30 hours or more or were counted as full-time employees by their employer.
Okay, great. Thank you, Selena and Natalia. Another question came in about signatures. So can people use trusted digital signatures such as DocuSign? No. The public service loan waiver application requires physical signature, also known as a wet signature. You can't use a digital signature there. It will get denied if you try. So I just want to answer that real quick. There was another question. Does the government pay towards the subsidized interest count as payment for public service loan forgiveness? That's a little bit confusing. I will say if you're in the public service loan forgiveness program, after your 120 qualified payments, anything left afterwards will be forgiven, right? So whether it's interest, principal, doesn't matter. Doesn't matter if it's an unsubsidized or a subsidized loan. Any amount you have after your qualified 120 payments will be forgiven. Okay. Cool question about where these webinars are located. So the DFPI has a YouTube channel. You could just go to youtube.com/CADFPI, and it takes you to our YouTube channel. We have a whole playlist of webinars that we've been hosting. A lot of them go very deep into certain student loan topics, but we will also be emailing everyone who registered for this webinar a link to where you could watch this recording, and then obviously a link to our YouTube channel as well. Panelists, if you all find a question you want to answer, please feel free to jump in. Here's one. Is it applied to parents who borrowed student loan for their children? Okay, so I'm guessing this one is about the Biden student debt relief. Is student debt relief applied to, looks like a Parent Plus loan? And yes, Parent Plus loans are qualified for student debt relief. You just have to make, I think you just have to, you have to make those income thresholds, right? You have to be eligible with those income thresholds. Let's see here. Who is that third group who can help? So like I said, on the DFPI, let me just show this link right here. The DFPI has a dedicated website with a bunch of different resources. It would take me all day to talk about all the different organizations who do different things for provide different assistance for student loan borrowers. But you just go on the website. Like I said, there's a whole list of other government agencies, as well as nonprofit groups and also legal aid groups who provide some form of assistance to student borrowers, depending on what kind of assistance you need. Okay. Let me see here.
There were some questions about people that are no longer in public service. So I have this last one. I worked for 14 years in public sector loans, gotten in 1998-99. Do these years count for loan forgiveness? So any employment after 2007, which is when the program was created. So as long as the employment was after 2007 and the borrower was in repayment, they don't have to still be working, but it's after 2007, which is the beginning of the program. So they would have to look at their loans, see what type of loans they have. If they need to consolidate, and then apply for PSLF before October 31st to benefit from the waiver. If they do it after, then they will no longer qualify because they're not working with the qualified employer. And if they consolidate their loans, and at that point they would have to restart at zero.
Thanks, Selena. So we have plenty of time for questions. Please feel free to continue to submit them through the Q&A. I'm going to take it all the way up. I'd say about another 5 minutes. So here's a question really quick. If I started school this year, is that loan eligible? And I suspect they're meaning, is it eligible for student debt? The answer,
Yeah.
Go ahead. Natalia.
I was happy to take a few. I've marked it on the Q&A, but a few of these So loans dispersed before June, this is for student debt cancellation. Loans dispersed before June 30th of this year will count. So that's pretty much all students except for incoming freshmen. And then we're also being told that there will be an automatic data match where that it should happen automatically for those in school. But again, just like PSLF, when in doubt, apply, just to make sure that you cover all your bases. And would you like me to go through the questions I can answer live?
Yeah, of course. Go ahead.
Okay. So we got a question. Can you clarify the 9/29 date change for consolidated loans that qualify? i.e., if I consolidated my unsub and sub loans together before 2020 pause on loan payments, would I potentially qualify? So to this borrower, yes, as long as you consolidated your commercially held FFEL loan, and this is less than 2 million borrowers, I think still at this point, so this is not a large number of borrowers, but if you did it on September 28th of this year or before, then you will be able to count. Unfortunately, as of September 29th, you can no longer consolidate your older FFEL commercial loan for student debt cancellation, but you can and should for PSLF if you work in a government job. That your best bet at this point is to go and to get as many PSLF credits as you possibly can. Then we also saw a question that's brought up. The Biden administration was sued by several states because of the relief plan. Will that affect California borrowers? So I will just say where we stand right now, yes, there have been multiple lawsuits. At this point, it doesn't seem like anyone, this is coming from my point of view at Student Debt Crisis Center, that any of these lawsuits really have standing. But that we do know, we heard directly from the department that they are moving full steam ahead to get the form out to continue getting cancellation into your hands. And just another note that, you know, just because a lawsuit moves forward doesn't mean that debt relief is over for all borrowers. There are other remedies in lawsuits. So right now, I'm just going to go with the faith that the department is moving ahead. And at this point, none of these lawsuits seem to have viable standing. I feel like there was one more. I think that's it. Q. I'm happy to answer more though.
Okay, sure. I do want to spend maybe 2 more minutes answering questions. Panelists, if you see anything jump out at you, please feel free. I know there's a lot of questions right now that are just coming in. Oh, here's a good one. Can I get money back that I paid while I was working in the public sector for city government or county government?
If they're asking for PSLF purposes, no, there are refunds available will be automatic for some borrowers if they for Biden relief purposes, but for PSLF, no. So only for the Biden relief. So I'm not sure if this borrower is referring to the PSLF program.
Yeah, I would say it really depends. It depends on the situation. Assuming, Selena, just let's talk about hypothetical here. Let's assume someone has completed their 120 payments and they applied for public service loan forgiveness. They're accepted to it. What if they had 121 payments? Will they get a refund for that extra payment that they made once they're accepted into public service loan forgiveness?
Yeah, once forgiveness is granted and they have made an extra payment and it was on a direct loan, yes, they would get a refund on that direct loan. So let's say they consolidated and had a bunch of different loans, Fell, Perkins, and some direct loans, they would receive a refund only if that one payment was on a direct loan. So again, those 20, the federally owned loans, yes. And the same for the relief, this basically the same. If they were under the eligible for that payment pause, which means they have those direct loans, again, those Department of Ed held loans, and they voluntarily made payments, and then they qualify for the 10 or 20,000. Some will automatically receive refunds, and some may request it through their servicer. But again, before any request, really find out if you're eligible. And there is information on that on the FSA page, the student aid relief, the student relief page.
Perfect. Thank you, Selena. I will say, go use the studentaid.gov's public service loan forgiveness help tool. It'll get, it's a great place to get started, and it'll even, depending on how far you are, it might even determine how many qualified payments you have. It really depends, but just get started on the help tool. It's the best place to start. Okay, one more question. Panelists, anyone that you want to jump in on? I want to try to find. Want to try to find one more that is good. I mean, all these questions are great. It's just something that will be easily answered in the next minute. Okay. Here's one, and this is one I get a lot. So can you receive a refund on payments made towards, well, this one is towards interest while in school prior to the pandemic? I don't think so. Not after, while you're in school, if you're paying on interest before the pandemic, probably not. I don't want to say yes or no for sure, but probably not. But I will say this. A lot of questions we receive is, can I get a refund if I paid off my loan during the pandemic? And the answer is yes. You want to contact your student loan servicer. And if you paid off your, during the pandemic back when it started, and let's say you had, I don't know, $5,000 in your loan and you went ahead and paid it off, but you also qualify for the Biden's student debt relief, you can actually go to your servicer, ask for a refund, and then you have to apply, of course, for the Biden student debt relief, and that will be applied towards whatever you owe on your student loan. It's a question that I get a lot, and panelists, feel free to jump in if I missed anything on that. Okay, great. 1 minute left. I do want to just go over some things. Again, big reminder here, October 31st is the deadline for this public service loan forgiveness waiver. Make sure you get that waiver done. At least finish the help tool if you can. Student loan repayment pause starts back up in January next year. So please get ready. And finally, here's some resources. Again, you want to go to our webpage, tons of resources there. We have a YouTube channel, which we record tons of different webinars for. If you're looking for public service loan forgiveness and trying to find a good place to start, you can go here, forgivemystudentdebt.org. Again, the DFPI has a newsletter. Please subscribe to us. We have tons of great information, including new updates about the student loans and what's going on there, as well as events and other webinars that we'll be hosting. And then, just a great help guide from the Consumer Financial Protection Bureau on student loan forgiveness. Okay, finally, contact information for Selena Damian. There it is. That's her email address. We will also provide the slides and a recording of this webinar for everyone who attended. So thank you for coming here. Again, I want to thank Assemblymember Jim Cooper and Senator Dave Cortese for helping us put this webinar together. Thank you for taking time to be here, and thank you for all the panelists for the great contributions and presentations. Have a wonderful day.
Thank you, everyone.
Thank you.
Thank you.
Thank you, DFPI. Very important.